The year 2026 is shaping up to be a pivotal moment in the ongoing battle between gold and Bitcoin. Both assets have long been viewed as stores of value, yet they represent vastly different philosophies and approaches to wealth preservation. Gold, with its rich history spanning thousands of years, has been the traditional safe haven during times of economic uncertainty. On the other hand, Bitcoin, born out of the financial crisis of 2008, has emerged as a revolutionary digital asset, appealing to a new generation of investors. As we delve into this debate, we will explore the strengths and weaknesses of each asset, their market dynamics, and what the future may hold for both assets going into 2026 and beyond. Gold has been revered for its intrinsic value, scarcity, and durability. It is a tangible asset that has been used for currency, jewelry, and investment for centuries. In 2026, gold continues to hold its ground as a reliable hedge against inflation and currency devaluation. Central banks around the world have been increasing their gold reserves, signaling a renewed confidence in the metal as a safe haven. Furthermore, gold has a well-established market with deep liquidity, making it a preferred choice for institutional investors. The physical nature of gold also provides a sense of security that digital assets cannot replicate. In times of crisis, gold has historically proven to retain its value, making it a trusted asset for wealth preservation. Bitcoin, on the other hand, represents a paradigm shift in how we perceive money and value. With its decentralized nature, Bitcoin operates independently of any central authority, making it immune to government interference and inflationary pressures. As of 2026, Bitcoin has gained significant traction, with millions of users and a growing number of businesses accepting it as a form of payment. The limited supply of Bitcoin, capped at 21 million coins, creates a sense of scarcity similar to gold. Additionally, Bitcoin's underlying blockchain technology offers transparency and security, attracting tech-savvy investors who value innovation. As more individuals and institutions recognize Bitcoin as a legitimate asset class, its role in the financial ecosystem continues to evolve. The market dynamics of gold and Bitcoin are also worth examining. Gold prices are influenced by various factors, including geopolitical tensions, interest rates, and overall economic health. In 2026, fluctuations in gold prices may be driven by inflationary pressures and changes in monetary policy. Conversely, Bitcoin's market is characterized by volatility, with prices often experiencing dramatic swings within short periods. This volatility can be both a blessing and a curse for investors. While it presents opportunities for high returns, it also poses significant risks. The growing adoption of Bitcoin by institutional investors has led to increased market maturity, yet its speculative nature remains a concern for many traditional investors. As of the making of this video, gold is sitting around $5,000 an ounce, while Bitcoin is hovering around $69,000 per coin. The cultural shift towards digital assets cannot be overlooked in this battle. Younger generations are increasingly favoring digital currencies over traditional investments. This shift is driven by a desire for financial independence, technological innovation, and a distrust of traditional banking systems. In 2026, Bitcoin's appeal as a digital asset may resonate more with millennials and Generation Z, who are more comfortable navigating the digital landscape. This demographic shift could influence the future of wealth management, as financial advisors and institutions adapt to meet the needs of a new generation of investors. The cultural acceptance of Bitcoin as a legitimate asset class may further solidify its position in the market. The regulatory landscape surrounding both gold and Bitcoin will play a crucial role in their respective futures. Gold is subject to established regulations and has a long history of compliance, making it a familiar asset for regulators. In contrast, Bitcoin is still navigating the complex world of cryptocurrency regulations. Governments around the world are grappling with how to classify and regulate digital assets. In 2026, the outcome of these regulatory discussions could significantly impact Bitcoin's growth and adoption. Stricter regulations could stifle innovation and limit access, while a more favorable regulatory environment could pave the way for greater acceptance and integration into the financial system. As we look ahead to 2026, the battle between gold and Bitcoin is far from over. Each asset has its unique strengths and weaknesses, appealing to different types of investors. Gold remains a time-tested store of value, while Bitcoin represents the future of money in a digital age. The outcome of this battle will depend on various factors, including market dynamics, cultural shifts, and regulatory developments. Ultimately, investors may find that a diversified approach, incorporating both assets, could provide the best of both worlds. As the financial landscape continues to evolve, the interplay between gold and Bitcoin will be a fascinating story to watch unfold in the coming years. I hope this video was informative. If it was, hit that like button.